All right. Hello, everyone, for another episode of Tax Talk Live. So we'll be doing another quiz on as we have done the last couple of weeks. So make sure that you leave a comment in a minute when we bring up the quiz question. So today's quiz is a multiple choice, I believe. And the question is, what Latin word does tax originate from? So our options are taxo, taxin, taxly, or taxinator. So leave your answer that you think it is in the comments. Doesn't matter if you're ever on Facebook or on YouTube, you can join in today's quiz. So for those that are new here, if it's your first time here, this is kind of what we do to start the thing off. I do a bit of a quiz, leave a comment in there, and then I'll eventually get into the topic and some questions that have been asked through the week, and people can leave questions in the comment as well. So today's topic is going to be end of financial year sales. So I'm going to be talking about the truth behind them. So are they actually worth it? I'll talk about them from a tax point of view, also from a money saving point of view. And then what I'll do is jump into the questions that have been asked through the week. So you can ask questions during the week, for those that don't know, through my Instagram. I normally put up a story, or you can leave comments on the YouTube videos, or contact me on any of my socials and I will get to them on this, or hopefully answer them during the week. And then if anyone leaves any questions in the comments during this video, I will answer them then. So I can see a couple of guesses coming through. So we've got one for taxin, one for taxo. We don't have any for taxly yet, or taxinator. So again, I'll give you another 30 seconds or so. So it's, what Latin word does tax originate from? And when I get to the answer, I'll also tell you what that Latin word actually means, and you might make sense of where the word tax comes from. So if there's any questions that people want me to chuck in here for these quiz, feel free to send them in, and that way I've got a different variety. So I'll be doing a range of multiple choice or yes or no, range of different things there. So it looks like we might not be getting any other answers come in. So I will jump back into it, and the answer is taxo. And taxo means I estimate. So the Latin word that tax originates from is taxo, and that comes from the Latin meaning of I estimate. So obviously tax is all about estimating, and when I do a tax return, I'll give you an estimate, so you can see where that wording comes from. So yeah, there's a little bit of history of the word tax. So now I'll get into the main topic for today, which is going to be, when I get my thing up, end of financial year sales. So EOFY, end of financial year. And I'm going to be talking about sales. So you're probably starting to see a lot of comments. This is what happens when you're doing live and you're reading things. You're going to see a lot of sales, a lot of things being advertised, TV, social media these days, radio, everything promoting end of financial year sales. So what I'm talking about here is you're going to get all your companies, and they're going to be pushing, and they want to make more sales. And therefore, we have Christmas time, we have Easter time, we have all those kind of things. And the seasonal thing is end of financial year. So there's going to be a huge push from companies to try and boost their sales by promoting end of financial year sales. So we can look at that from 2 points of view. We can go from a tax point of view and a money saving point of view. So I talked to you about a bit of what that means from each of them, and then talked about, look, are they actually all they're made out to be? So we do have a comment that's come in. Hey, Ethan. So, hey, it's great to see anyone that's watching. So appreciate it. If you are watching on Facebook, make sure you hit that like button. And if you're on YouTube, hit the like button, because that really helps me get this video out to more people. Comments and likes. If you haven't hit that subscribe, do that. Those things all help me. So I appreciate anyone that watches, even if it's 30 seconds of this. So I'll talk about end of financial year sales from a tax point of view first. So this is why quite often they're pushed, especially to business customers, is that people are going to push and go, okay, buy before the end of the year, get it in before 30th of June, get that tax deduction in. So this is always the most concerning thing to me, is because we've got advertising that is potentially giving you almost tax advice and telling you, go out and buy this because you're about to claim it on tax. Now, there'll normally be a little disclaimer somewhere on there that says, if you do this, seek the advice of accountants, do your own research kind of thing, but it's, in those tiny little words at the bottom of the ad. So the thing you've got to be careful for is what you're buying actually deductible, and do you understand how it will be deductible? So understanding how deduction works is so important than just going out and spending money on something. So let's take, for example, we've got a ad from JB Hi-Fi. They're saying end of financial year, go out and buy a laptop and you can claim it. So first of all, we need to establish, are you an individual taxpayer or a business taxpayer? Because you're going to be treated differently. So I spoke about this a few times on a few of these lives. So if we've got an individual taxpayer and they go out and buy a laptop and say it is 100% for work, it's going to be deductible in most situations there. It's a work-related expense. It's a expense you're having to pay for that is related to your income you're earning. But the issue is that with an expense for an individual taxpayer, it's going to be depreciated if it's over $300. So it's going to depend on the date of purchase. So if we go, okay, I go out and buy it on the 1st of June, what's going to happen is that claim is going to be, first of all, it's going to be depreciated over a number of years. So it depends on the asset. Obviously, things like computers have a low useful life. They depreciate pretty quickly. But what's going to happen is going to go from date of purchase. So we've got that 1st of June purchase, which means we're only going to have 30 days in that year. So we're only going to get a small claim in that year because our depreciation claim starts from that date. So that's the thing you've got to consider, is that if you're an individual taxpayer, rushing out to make that purchase pre-30th of June may not help you that much. Yes, you're going to get that and it's going to start that depreciation process, but it's not necessarily going to get you this full claim straight away like you might be expecting. This could go for things like laptops, is quite common. Tools, so a lot of tradies are going to be buying tools. So if you've got buying those bigger price tools, so those things over $300, they're going to be depreciated. And again, tools will probably have a longer useful life than, say, a laptop. It's just going to depend on what you're buying. But again, that date's going to become important. Now, if you buy that on 1st of July, you're going to get that full year. Now, obviously, buying in June, it's going to still get you a small claim this year. And then obviously next year, you'll get that full year of claim, depending on what the rate is. But you can see rushing out to do that purchase might not benefit you as much as all these advertisements say. And then the other thing to consider is it deductible? So you don't want to be going out and rushing out as an individual taxpayer and going and buying something, thinking it's going to be deductible, and it turns out it wasn't even deductible in the first place. So again, I've seen that happen before. Someone goes, yeah, I went and did this. Or it might be very minimal. Yeah, I went and bought a new $3,000 laptop, and it turns out really only 10% of that is work-related. Therefore, they're getting such a small claim anyway. So having an understanding if it's deductible. So if we now look at it from a business point of view, so this is where it's a little bit more complex because it's going to depend on the year. At the moment, there's lots of things about instant write-offs and full expensing. So at this stage, most of those assets are going to be able to be fully claimed for most businesses. So that date becomes irrelevant from a tax point of view because what's going to happen, they can fully write that off. So even if they do buy it on the 30th of June, they can fully write that off in that year. So that's where that's more beneficial under the current way things are structured. So you can see where the advertising does come in and it goes, yeah, okay, it might make sense to go and purchase an asset pre-30th of June. So for those that follow me on Instagram, you'll probably see that I have actually gone out and bought myself a Mac yesterday. So that's really exciting. I'm hopefully going to be able to edit hopefully up to 4K videos. So I'm currently using my MacBook Pro that's sitting down here below. And I've now got this upgraded, got one of the new Macs. So I'm really excited about that. But one of my reasons for purchasing was bringing that purchase forward into June because it'll be a write-off for me. It's a business expense, and therefore it made sense to do that now rather than wait till 1st of July. So you can see that from a tax point of view, you need to consider is things deductible, and do you understand how it's not deductible? How it will be claimed. And just to give you one example of somewhere where some of this advertising gets a little bit misleading is, let's look at sheds, for example. Now, you'll see a lot of shed companies going, oh, yeah, if you're a business, buy your shed, get these write-offs. But there's only very certain situations where a shed is going to be an instant write-off. Quite often, they're going to be deemed as like a capital asset. They're going to be more like a building as such, and they've got a different set of depreciation rules there. So again, that advertising is really misleading, and they'll advertise to a broad amount of people, but the deduction may only be suited to a really particular type of people, and then they have these disclaimers down the bottom. So you've just really got to make sure you're doing your research and make sure you ask those questions if you're considering a purchase. Contact your accountant and go, okay, look, is this deductible and is it a good idea? And I mean, I've spent quite a bit of time over the last month doing tax planning meetings with clients. So I sit down with them and assess their current income, what the current tax would be payable on that, how much tax they've paid, what they've still got to pay. And then, okay, what kind of things are they looking at doing in the next 6 months? Should we bring in that forward to pre-30th of June, therefore bringing forward that deduction and potentially reducing tax in this year and saving them some money? So there's definitely strategy you can put in place, but asking those questions now is much better than asking it in August and go, yeah, I bought this or I didn't buy this. So that's some of the things you need to consider. So that's kind of looking at from a tax point of view and understanding those kind of things. Then what I want to talk about is from a money saving point of view. So there's a lot of sales that go on. Nowadays, a lot of things are on sale all year round, it seems. It seems like there's always a sale. It's not like back in the day, you used to kind of go, oh, there's going to be Christmas sales, end of financial year sales. They're your big sales. But nowadays, there's sales every week. Every single week, things seem to rotate on sale. So one thing I know from just history of seeing it all the time is, let's take DVDs and Blu-rays at JB Hi-Fi. They seem to go on a 20% sale, and I'm sure it's once a month, it seems like. So I always know if I haven't bought that kind of stuff for a while, but when I was buying that kind of stuff, I know, okay, there will be another sale soon. It'll be another 20% off store-wide. And again, it would rotate around, might be every 6 weeks, but it rotates around. So nowadays, I don't think you're getting these great deals end of financial year. But if you think about it, these businesses quite often know that a lot of people in the market to buy assets at this time of year. They're probably not going to discount them huge percentages. So that's something you got to consider is, are sales actually on sale? So can you buy that thing on the sale price all year round? So that's something you need to consider of, yeah, are you actually saving money? And then the second part of, okay, saving money on a sale is, did you actually need that? And this is probably applies more than just businesses. It applies to everyone. Are you actually just buying something because it's on sale? Or were you going to buy that anyway? A sale only really saves you money if it was something you were going to purchase at a later date for a higher price. And yeah, you got it on a cheap price. That makes sense. But if it was something you were never going to spend money on, well, you're obviously going to be out of pocket. So you haven't really saved any money in that case. Now, obviously for businesses, it's slightly different because you're obviously going to have expenses that are going to be coming up, and bringing them forward to when they're on sale or bringing them forward like we talked about for a tax deduction might make more sense. But again, that same concept's going to apply. Is that, are you just buying something just because it's on sale or just to save tax? That doesn't make sense. So I spoke about it before. If you go and buy $100 thing just so you can claim it on tax, you might be getting, even if it's $30 back, $35 back of tax, but you're still $65 out of pocket. So if you didn't need that, it doesn't make sense. But you can snowball some of these benefits that if it's a tax deduction, you're bringing it forward and you're getting it on sale. There's lots of things that help support you there to make that a beneficial and make sense. So making use of that. So that would be my advice. Look into the sales, look into that product, see if that's what it's been retailing for before, or keep an eye on things. And especially with big purchases, if you haven't been keeping an eye on these things, chances are maybe you were just decided to purchase that just then, and maybe you haven't actually done that thorough research. So for me, I know with my Mac that I purchased, I've been looking into it quite a bit since they were announced a month or so ago. And I've known I've needed a computer for longer than that. So I've obviously been in the market, been keeping an eye on the models, waiting till the time is right. Something comes out that I'm happy with, a price I'm happy for. And then this time it worked with wasn't even a sale, it just worked in with timing. So sometimes that timing is important from a business point of view. So yeah, don't get sucked into some of these sales. Make sure you're doing your own research and don't get sucked into the advertising with tax. Do your own research on that. Speak to an accountant. Make sure you're looking into it read the fine print and have an understanding of how that will actually work for your individual situation, not just this broad advertisement. So I hope that's been interesting on end of financial year sales. So if anyone has got anything on sale that's actually a good sale, leave it down in the comments below because I'd love to hear from you. And then what my next thing to do will be jumping into some questions that got asked through the week. So I think we have 3 questions to ask. If anyone's got any other questions, make sure you leave them in the comments below. Or if you're watching this afterwards, because these videos stay up on YouTube, so you can rewatch them. That really does help support the channel if anyone does want to rewatch. But leave a comment there, and I'll either answer it there or I'll add it onto next week's video. So do that, or like I said, leave those comments in the comments now, or contact me on socials, and I'll get them on next week's episode. So the first question I had here was, can I claim a laptop if I buy it before 30th of June? So I think I've covered quite a bit of this. So someone asked this one, and probably seen the topic, and hopefully you've been watching because that will clear up some of that. But like I said, it's going to depend. Can you claim a laptop? Well, that's a very broad question. Yes, for some people, no for others. So make sure you're not just getting stuck and go, yeah, I claimed a laptop. Well, if you're a retail assistant, what would you need a laptop for? So think about that. But if it is deductible, so we're going to go, is it, if you're an individual, is it work related? does it relate to your income you're earning? Is it required for work? I mean, a lot of people, if you're getting supplied a work laptop from work, then it's going to be very unlikely your personal laptop is going to be deductible. So again, there's going to be certain situations you need to assess on that. So that's from an individual point of view. From a business, it's probably more likely the laptop's going to be deductible because a lot of businesses are run online, run through computers and laptops these days. But again, there could be a personal use portion, so you need to understand that. So having that understanding, okay, is it deductible? Yep, well then you can claim it. And then like I spoke about, it's going to depend on individual versus business as to how that's deducted. So it's an instant write-off or whether it's going to be, whether it's instant write-off or whether it's going to be depreciated, what the value is and those kind of things. So yeah, it definitely could be claimable, but it's just going to depend on your situation. So if anyone does have that kind of question about their particular situation, happy for you to send me a message and we can have a chat about it. So the next one was, can you claim the whole fee you pay to an accountant? So this will probably be a pretty common question coming up to tax time. So tomorrow, I think it will be, hopefully, assuming that my calendar goes to plan, I'll be contacting my clients from last year to start taking bookings for this upcoming tax season. I've got some checklists that hopefully will be going out and all that kind of stuff. So that's all exciting. So that's going to keep me busy over the next few weeks, getting all that in place so that we can hit the ground running in July. But can you claim the whole fee? Well, yes, in most situations, you're going to be able to claim the whole fee that's going to be paid to your accountant. Now, what that means is you are going to claim that as a deduction. You will not get that fee back. Don't have that understanding that, oh, well, if I pay $100 to my accountant, I just claim it, I get that whole amount back next year. That's not how tax works. So, yep, you'll claim that. So you go get your tax return done. Your accountant charges you, well, hopefully $79, like Rooshock Accounting will. So you will then claim that in the next year's tax return as a deduction, and that'll reduce your taxable income by that $79. And then obviously by reducing your taxable income, if you've paid tax, or even if you haven't paid that, it's going to reduce your tax payable, and obviously they're hopefully going to increase your refund or reduce your payment amount. So yes, it can be claimed, but it doesn't necessarily mean you're going to get that $79 back. You will get it back by proportions to your marginal tax rate. So that's kind of the easiest way to work things out. And that goes for mainly for individuals. For companies, you can also use that. But go, okay, what's my marginal tax rate? Where am I going to sit on the tax tables? And go, okay, what would my deduction be? Okay, what times that out by your marginal tax rate? And that's an easy way to have a rough idea of how much that particular deduction will benefit you. So that'll either benefit you, like I said, by increasing a refund or reducing a payment. And the third question I had was, how do you calculate CGT on gains made from auto compounding staking rewards? So this one comes through on Instagram. So I'll just read it again so I can get my head around. So how do you calculate CGT on gains made from auto compounding staking rewards? So I think we're talking about crypto here. So I'll give you a bit of a brief on what this is. So people are staking their crypto, and what it pretty much means is that they're receiving something back in return for it. So the easiest way for me to describe it is almost like interest on a bank account in that sense. So where it gets a little bit confusing, and I want to do a full video on this at some stage when I get around to it, because it's a pretty complex topic, but a lot of people are starting to get involved, is, okay, we've got a asset that we're staked. So pretty much we're staking it, and we're going to receive a staking reward back. So that reward is going to be in the form of income. So now that could be in tokens. We could be getting it. It's quite complex. It's going to depend on what the method is. But we're going to be receiving something back. Now that asset may not be in cash, but it is going to be classed as income. So say we've staked 100 of a certain coin, and it means we're going to get 1% back. So we get one coin back. We'll call it Ethan coin. So we get one Ethan coin back. What's going to happen on our tax return? We're going to have to record what was that Ethan coin worth on that day. So that might be worth $3 a coin. So we got one of them back. So we've recorded $3 of income on that day. Now, that's one side of it. So that's our first part. Now, that's not CGT. That's regular income. So that's going to be included as income, a bit like interest income would be included in your tax return. Now, we're going to forget, that may go ongoing, and we're going to have to do that each time. So that's where I definitely recommend accounting software. So if you haven't, check out my video I've done on Coinly and coin tracking. Yeah, if you're not using accounting software for your crypto, it's going to be a real nightmare for you. So now we've got that one Ethan coin, and we decide 6 months later we're going to sell that Ethan coin. Now that coin has now gone up to $4.50 in value. So we got it at $3 and we paid tax on that income of $3. That's now gone up to $4.50 when we sell. So we've actually got $1.50 gain on that. So now here's our second taxing event of, okay, we're going to pay tax on the capital gain of that. So the capital gain is $1.50. We haven't held for over 12 months. Therefore, it will be $1.50 of capital gains that will be added onto our income. So you can see that it gets quite complex to keep track of because we've got two taxing points. We've got a taxing point where we receive a staking reward, and then we've got a taxing point when we sell that staking reward later on, because that staking reward has just become an asset. So that's where people get, and they go, oh, you're not going to pay double tax. You're never going to pay double tax on it, but you're just going to have two taxing points, and they're going to be treated completely differently. So it gets quite complex to keep track of all this, especially if you're getting daily staking rewards like I do know you do get on some things. So I know Binance pays out quite often, and it gets quite complex, but it can be tracked. I've tracked it with coin tracking. I've tracked it with Coinly. They both work. I'd highly recommend looking into something like that. I've got the links in the description of this video on YouTube. Go and click those and get signed up to one of them, because it's definitely going to make your life much simpler with that. So that were the questions I got to ask through the week. So I've got a couple of questions that have come through. I'll jump into this one first because it's going to be relevant. So when you're using compounding vaults on Polygon, and Coinly is, well, average for it. So yeah, look, sometimes Coinly and coin tracking don't work well for certain things. I've definitely noticed that. My advice in these situations is try one of the other software. So try coin tracking. There's Coin Tracker, Coin Panda. There's quite a few that are coming out. Give one of the others a shot and see whether that API works better. If it's not working through API, then CSV is going to be your friend. So what a CSV is, you're pretty much going to import that into the software you're using. So just have a play around with and try and work out a strategy that works for you. Obviously, it's going to depend on how much you've got invested, what you're doing with that, what other investments you've got. But yeah, try a couple other things, but sometimes the APIs don't work well on these things. So try and do a CSV import would probably be my suggestion if you've got something that's not working as my first point of call, and go, okay, if I do a CSV, set up a reminder in your calendar once a month to do that CSV on those staking rewards, if that works. If that doesn't work, try one of the other softwares to see if the API works better on there. Sometimes it can on some of the others, just might be better suited to that. And make sure when you are connecting APIs on any of these softwares that you've read and understood what does import and what doesn't. So for instance, with Binance, I don't think it imports, I think it's fair income. So you're not going to get those deposits in, say you're depositing Australian dollars and then buying stuff. So you want to make sure you're having a good understanding of what's actually being imported, because that's when you run into issues. So that's where a lot of my work on fixing things up is actually having an understanding of what's getting imported from the exchanges into Coinly or coin tracking, and having an understanding of how we fix that. How do we get that information from our exchange, from our wallet into our software? So yeah, hopefully that answers that question for you. So I've got a couple more comments that are coming through here. So Bitcoin is on sale at the moment. So yes, for those that don't know, Bitcoin's had a bit of a crash over the last couple of days. We've had a lot of interesting things going on that space. We've had now, correct me, I will do a bit of a search here. We've got a country now accepting Bitcoin as legal tender. Let me see. I believe it's a South American company. Yeah, so El Salvador is now accepting Bitcoin as legal tender. So, yeah, I'm not quite, and they're going to be bringing some quite friendly tax laws. I'll see if I can share that one up for you on that. But, yeah, it's quite an interesting one there, because they're going to bring in some tax-friendly laws there for Bitcoin. Pretty much saying that Bitcoin will be tax-free on capital gains and stuff. But, yeah, there's the article on that. But that country has a very high crime rate. So for anyone that's thinking about moving over there, you might want to consider that, because some of these things are risky. So, but yeah, quite an interesting space. And these kind of things are always going to make things quite interesting going forward, that when we've got countries that are wanting to bring it in as legal tender, and it might not be Bitcoin, it could be other cryptocurrencies, what that will do to the price long term. Obviously, some of these smaller countries, it's not going to do a lot, but it may open up opportunities and may just show people the way of how these things could be implemented. So, yeah, definitely an interesting one there. So, yeah, cryptocurrencies, like I said, I talk about every week. They're so volatile. So make sure you have a good understanding of what you're investing in, because a sale quite often means that if people invested, they're losing money. So have an understanding of that. So I do have one more question here. So is crypto received from mining considered the same type of income as earning interest from a savings account? Now, this crypto, on mining on crypto and the tax on that is quite an interesting one. So I have got that on a list of my videos to make. So logically, it makes sense that mining crypto. So for those who don't understand, mining crypto is pretty much is quite in depth when we go into the technicalities of how it actually works on the technical side. But pretty much, it's what keeps these blockchains going, and they're rewards for keeping the blockchain going on a real basic scale. They require computing power, etc. But you're getting rewarded normally in the token that you're mining. So obviously, for people that know Bitcoin, there's people that mine Bitcoin, and obviously back in the day, it was probably more beneficial than what it now. It costs a lot of money, and a lot of it's done in China where electricity prices are cheaper. But you're going to receive mining rewards. So you're mining that thing. So it depends if you're treating it as a hobby or a business. So it's a little bit confusing here. So bear with me. So we've got two different things here. So if you're treating it as a hobby, what the ATO say, and I want to check on this and do some more research into it because things seem to change quite often, but I want to do a full video on this. But so make sure you check that out. And pretty much what they're saying is if it's a hobby, those mining income that you're receiving as such, it's just going to be treated as an asset, but you're going to pay tax on it when you sell it, like capital gains, and it's going to have a $0 cost base because you're not paying tax on it. You're receiving it for free as such. It's got a $0 tax base, and then when you sell it, so for instance, if you're lucky enough, you mined one Bitcoin, that's going to be treated as $0 asset base. When you sell it, that you'll pay capital gains on it. Now, if you're running a business of mining, then we're going to look at it a little bit more like what we just did with the staking rewards, where we're going to have income. So obviously, what was the value when it was mined? And probably it's going to depend on then what you're doing, whether you're holding these long term or whether you're then selling them. So quite often people that mine will then instantly swap that into another currency. So especially on some of the smaller coins, if they're mining them, they're going to swap it maybe to a stabler coin like USDT or USDC. So things like that. So it's going to depend if you're hobby or business. And then we're going to depend on how we actually treat that. So I will do a full video on mining taxes on crypto because it is quite complex and we need to have an understanding of what kind of classification and then go through that in more detail. So it's a really good question and something I definitely want to talk about in further detail. So definitely throw those kind of questions at me. If it's something that I need to do, you know, a little bit more research just to put something, I understand all the things, but sometimes to put it into a thorough way that makes sense to people. I want to make sure I've got a video that's really clear from start to finish, not just bits and pieces. So leave that one with me so I can get a real full in-depth video on start to finish mining taxes on Bitcoin. Mining and crypto taxes. So I've got one more question. So do you get income taxed upon receiving an airdrop or only once you sell? So again, it's more likely that airdrops are going to be similar to staking rewards. So when you receive it, it's going to be income then. So once we get that, it's going to, so we're going to have income that comes in there and we're going to pay tax on that like we did with the staking rewards. So the reason you're receiving an airdrop normally is because you've invested in something or you're holding something. So you're receiving more of that asset. So it's like you're receiving income, but be no different to receiving interest on a bank account. So you receive that comes in, say, Australian dollars. This time it's coming in normally in the form of more tokens or more coins, for instance. So that's why it's going to be an income point. And then if you choose to hold those assets and that asset appreciates in value, that's when it's going to be a taxing point. So you're going to have, again, those two taxing points of that income tax and then that capital gains tax. So it's really important that you keep records of these things and have an understanding because, again, we've got multiple different entry points, multiple different acquisition dates, and therefore we need to keep track of values on those dates, values when we sell. And then, again, you can see this is all starting to get more and more complicated depending on how often you're receiving airdrops and then obviously what the assets are, how easy you can track those values. And again, that's where software will likely come into place. And that may be a combination of APIs into software or CSV files. So all these things can help. So yeah, hopefully that helps. Again, it's something I need to probably go into more depth on a full video. So I've got a few topics here clearly of staking. We've got mining. They definitely need more in-depth discussion. So got another question here of, is mining as a business, does it attract GST? So again, we then need to establish, are we running a hobby or a business? If we're running an actual business, do we have an ABN? All those kind of things set up, which obviously if you're running a business, you should. And then we're going to go, okay, what are our rules regarding that? So then we have to go into our rules of what, obviously GST turnover and things like that. But then we need to establish, is mining income actually applicable for GST? And they're the kind of things. So again, I want to cover that properly in a full video. So I'll leave that comment for now, but definitely keep tuned. I'll do a video on that in full. Hopefully in the next couple of weeks. I've got a few videos scheduled, I think, planning on coming up. So I want to talk about investing on behalf of children. Want to talk again about VFriends, my NFT I purchased, which looks like it might have actually gone up in value quite a bit, which I'm happy about. I want to do more videos on different tax topics. So obviously we're coming right into tax time, so I want to do some more tax tips videos. But yeah, definitely want to cover mining in more detail on how the tax works on mining and how the tax works on airdrops. So I'll get back to that one. So I'm hoping those have answered a few of those questions we've had coming in. So it's been good. I love the communication with the audience. That definitely makes the lives much more enjoyable for me. So like I said, a few things coming up. I've got, so there's another one on DeFi. Yeah, I know that's a topic that I've definitely been asked about. Clearly, there's quite a few different crypto tax topics that I need to be talking about. So I'm adding to them. I did start work on a bit of a guide on the basics of crypto tax. So if that's something people are interested, a bit of an ebook on that, that's going to be a longer term work in progress. But yeah, that is something I also want to work on. So yeah, like I said, keep an eye out for some of these videos I've got coming up. I will make sure I post and make sure you check out my socials. Follow me on Instagram, especially because that's where I keep up to date on my new videos. And I will keep on top of those. If people have got topic suggestions, make sure you chuck them in and I'll get to them. I have uploaded a few more episodes of these of my podcast over on Spotify. So head over there. If you're new on the YouTube, like I said, hit that subscribe. Give one of my videos a share on Facebook or something. It really helps me. We're up to 715 or so subscribers. So I'm getting closer and closer to the 1,000 subscriber marks. I'm also getting closer to the 1 year mark. So I'd really hope to get to that 1,000 subscribers by 1 year. So I think 1 year for me will be the 8th of September on YouTube. So the easiest way to help for me is hit that subscribe, watch my videos. My watch time is only about half of the goal I need for monetization. So watching these long videos, go give it a replay if you really want to support the channel. Those things really help me. And those kind of things are what motivate me to keep pumping out videos. Like I said, got my new Mac over there. So hopefully I'll be able to increase the quality of some of these videos that I do. And yeah, so I thank everyone that's joined me. It's been a good night again, and I will see you all again same time next Wednesday. Thank you.